I'm still really bullish on gold. When that ends, whether it finds support here, which is less likely, or around 38.70, 37.48. In other words, wherever it ends, then we're going to start a third wave. We will break 4,400 again and head to new areas that we have never seen before. 45, 46. I expect silver to take out 54.40 and absolutely go to 55, 56 and beyond. My son, who's an excellent technical analyst, for months has been calling for $60 silver, and I'm going to take his call because he's really good at what I do.
That was one of the key premises of the first book, is that gold always does an accounting eventually of the expansion of a fiat currency supply. And it's done this throughout history. I do believe that is what's going on right now. That is the reason for gold becoming 1/5 of global monetary reserves. That is the reason for all the trends that we've just seen.
Gold's recent pullback may look unsettling on the surface, but beneath it lies the foundation of a much larger move. After an extraordinary rally from $3,350 to above $4,400, the market was due for a correction, a necessary breather in an ongoing bull cycle. Technicals suggest key support around $3,870 and $3,748, levels that could mark the end of this retracement before the next leg higher begins. When that reversal takes shape, gold's third wave could break into uncharted territory, pushing through $4,400 and driving toward $4,600 or beyond. Silver, too, is showing similar strength, setting up for another powerful surge once consolidation ends. GaryWagner, joined by macro analyst Mike Maloney, outlines that what we're witnessing isn't weakness, it's structure. Each move reflects a market digesting gains and preparing for its next explosive phase. As gold and silver correct, they are resetting the stage for a larger revaluation tied to fundamental imbalances in the global monetary system. These aren't the signs of exhaustion, but of accumulation. The bigger the correction, the stronger the breakout that follows. Now, we present the clips from their interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
We'll look at a daily chart, and when we do, you'll see that there are 3 candlesticks beginning on Wednesday, the 22nd, Thursday, the 23rd, and Friday. And the size of particularly Fridays and Wednesdays, the article was the 23rd, it was looking at this candle, spell a potential reversal or consolidation in which a big move could be coming. And that's exactly what we saw, because on Monday we saw a drawdown of $124. I mean, realize this rally from the beginning at $33.50 up to call it $4,400 an ounce was ridiculous. Currently, this correction has given back about 10.5%. I believe there's a high possibility it could go a little lower. I was hoping to find support at the 38.2%. That would be a real shallow correction, but realized that when we got a signal from a weekly chart, it would give you different numbers altogether. So my sense is that if it does continue lower, 38.72, that is just a 50% retracement. And you see that a lot in stocks. They move up $2, they come back and correct $1. The big one for a deep correction is a 61.8% correction, and that would take gold to 37.48. But traders, here's the good news. For those that know my technical studies that we use, this rally, in terms of an Elliott wave count, this is all wave 1. And we are now, I believe, in a wave 2 scenario. And when that ends, and it will, I'm still really bullish on gold. When that ends, whether it finds support here, which is less likely, or around 38.70, 37.48. In other words, wherever it ends, then we're going to start a third wave, primary third wave. These are primary waves. And a primary third wave, by its definition, is never the shortest of the impulse waves, which means it could have this kind of move again. One thing we do know is if we do get a third wave, as I believe we will break 4,400 again and head to new areas that we have never seen before.
Wild.
45, 46. It's just exciting. And my idea about this correction is it's been long overdue.
Yeah.
I mean, look, we've never seen, we have seen, but very, very infrequently, this kind of move from 33 to 43 is $1,000. And then it goes above that by a little bit. So $1,000 rally is not what we're used to. And that's what this was. When you consider I marked the beginning at 33.48 and it trades to 39.95, that is a huge move. And because of that, that's why I think this correction could continue to go on. But realize that ultimately, this market is based on fundamental drivers. So rate cut, that's bullish. A successful trade talk with the president of China and Trump, that will affect the market. That will not be bullish because that tends to bring gold down. But we have a government shutdown in the United States. That's at 27 days, and they stop issuing food stamps and food for those unfortunate enough to not be able to afford it. How is that going to affect gold? Mm-hmm. The drivers that have been driving gold, I believe, will continue to be present in the market. And after this correction is over, well, the reason I'm picking 38.70, so just below 39, is that's what the charts are telling me, because the first number you want to look for in a correction is the 23.6, 4,100. Blast through that. Then, well, will it find support at 39.97? It opens there today and trades below it. It's come up pretty interestingly enough from the low of the day. So that's telling me that they're either squaring off positions if they're short. I don't know. But it broke through this one. So the next logical point to look at is 38.74. Mm-hmm. That's what we want to see. If gold trades lower, how it reacts at these various points. Because using Fibonacci method has been very successful in pre-predicting price corrections. Well, listen, silver tends to outperform on the upside when gold and silver are moving higher and overperform on the downside during a correction. That's what we didn't see. Mm-hmm. Silver's been really almost head-to-head in terms of percentage gains through the rally. Now, this rally here, as you can see, I'm putting from July with silver at 36.30 and the top at 54.51. And when we look at it, I don't know why, but I should, let me add this. That doesn't matter. Yeah, we'll put it in. You can see it broke through the 23.6 like a butter knife. Look at the size of this move. You got the same kind of dojis or small body candles last week on the same date, and then you had a significant drop as we did in gold yesterday. But look at today's candle. It's actually a small body candle with a long lower wick, which could become what's called an umbrella line or a hammer. The same with gold, but it's green. It's actually above its opening price. Silver wants to run. Yeah, it has been behind gold. Gold was making, I don't even know how many all-time new price highs over the last year. I mean, it's a huge number, a double-digit number, but silver wasn't. But finally, silver broke above $50, and that would have occurred on Monday, the 13th of October.
Right. Yeah.
Ran as high as 54, and now it's correcting. And if you look, this low is kind of near the 50% retracement. That's a possibility of finding support there. Again, that would have if there's a positive move forward in the trade negotiations between China and the U.S., silver will respond in a very bullish manner because it's such a highly used industrial metal. And so that's one possibility as to why we're seeing a differential today between gold and silver. The exciting part is also I'm labeling this as a primary one. This is a primary second, meaning when the correction is over, I expect silver to take out 54.40 and absolutely go to 55, 56 and beyond. My son, who's an excellent technical analyst, for months has been calling for $60 silver, and I'm going to take his call because he's really good at what I do. He's watched me do everything for 8 to 10 years, soaked it in, and now he does it himself. And he loves silver. He made the call for $60. I'm proud of him, and I absolutely believe that that's where we'll see silver go to. If the correction is hopefully more shallow than it could be, it's going to go to a primary third wave. It will take out the former targets I have, and that's where these new targets will come in. Because if this correction actually runs its course rather soon, meaning the next even end of the month, October's almost over, middle of November, it could easily go and challenge these new levels based upon the fact that it's in a primary first wave. Mm-hmm. And that, of course, would update my targets higher than they were originally. And the way I look at it is the targets we put out got hit. Mm-hmm. Then we got a correction. So it's exactly how we're seeing it play out, in that I didn't expect $1,000 rise in gold or the kind of rise in silver. But when that is what unfolded, I realized that in the case of both markets, whatever you want to do, even if the fundamentals want to move it higher, it's an overbought scenario and profit taking will come in. That was the primary impetus that took gold and silver lower, that broke everything. And so it was way, way overbought. I think we did 30% in 4 months. And it really went to levels that I was looking for in both gold and silver. And we also believe that there's going to be a correction when it hit those numbers. And that actually came due. Now the question is, where will the correction?
India's decision to recognize silver as banking collateral marks a profound shift in how the world views precious metals. While some have misread the move as a declaration of a 10-to-1 gold-silver valuation, the reality runs deeper. It signals a structural elevation of silver's monetary role. As global supply tightens, particularly with silver's dependence on base metal mining, this policy underscores its growing importance in both finance and industry. When economic slowdown strikes, silver's dual nature as a monetary and industrial metal positions it for explosive revaluation. Globally, the gold-silver ratio continues to illustrate a wealth cycle that has yet to complete. With the ratio near 85, history suggests silver could outperform gold by more than 6 times before balance returns. The cracks in the paper markets of London and New York are becoming harder to mask, while physical demand surges abroad, from Asia to the Middle East. As this dynamic unfolds, the monetary reset long theorized by sound money advocates is transitioning from theory to reality. The world is gradually, then suddenly, rediscovering real value. Let's get back to the interview.
One other bit of news here. India unleashes silver as banking collateral with a 10-to-1 gold-silver ratio, declaring silver global monetary metal. And I've heard a lot of people comment that this implies that the gold-silver ratio should be 10-to-1. And I think this is a huge misinterpretation about what's actually going on in India. So I actually just wanted to clarify that for our viewers. What's going on is that India is setting silver as collateral for bank loans. they're capping the amount of gold that you can pledge as collateral at 1 kilogram and the amount of silver that you could pledge as collateral at 10 kilograms. So that doesn't imply that the value between the two metals is 10 to 1 or that the price should be 10 to 1, nothing like that.
Yeah, except I do think that that's probably the area that it's destined for, simply because of the shortage of silver as compared to gold. And we haven't gone into a global recession yet. And when we do, 60% of the 2/3 of the silver supply is a byproduct of mining metals that are very sensitive to recession risks. And so just when people start rushing toward gold and silver as a monetary metal to protect their wealth, that's when the supply dries up. At the same time that demand increases, supply goes away. Silver is still a bargain, and we're going to show that with the gold-silver ratio. But I also asked you to do the inverse of this to give people an idea of where silver is compared to its previous high in 1980. So let's there we go. So exactly. It's at $12 and is that 61 cents or 80?
61 cents.
Yeah. Okay.
Yeah. So still a long way to go. Still another
long way to go.
Still another 4-bagger relative to the dollar, and that's just based on the CP lie. Of course, it's probably a lot more than that to account for real inflation.
Yeah, so you've put together a spreadsheet and a calculator that sort of splits the difference between the original CPI and the new CP lie. And the truth really does seem to lie somewhere in between. But what was the inflation? I can't remember what the inflation adjusted price was compared to the original, the Shadow Stats CPI. Wasn't it close to $1,000 an ounce?
It might have been 1,999, basically 2,000. If I remember correctly, I'd have to check the spreadsheet, but yeah.
Which seems insane, but everybody has to remember this is the way the government used to measure inflation. Those are government numbers that we're using. So yeah,
exactly. So let's take a look at the gold-silver ratio. And what I did here, so the gold line is the normal gold-silver ratio that everyone's used to. The silver line is basically the price of, instead of 1 ounce of silver, I did 100 ounces of silver. That way we get whole numbers on our scale instead of, 0.05, 0.06, something like that. They're actually whole numbers. So you can see the symmetry here and, the wealth cycle that you've identified, Mike. And it looks like it's going to close at some point. We don't know what day, obviously, but it looks like it's going to invert at some point, and that implies that silver will outperform gold by quite a bit when this reverts.
Yeah, like I said, it takes monetary demand, and we've seen the beginnings of that. But what's interesting is we've seen it pretty much all overseas. What we've seen as far as gold and silver's price action over the past few months wasn't driven by the United States, but in Australia, people were lining up at coin shops, and this was happening all over the world. And so there comes a point where the paper game in the United States and in London can't continue overwhelming the physical market.
Exactly. I have the same chart here presented logarithmically. I don't know if there's anything you want to comment on here, Mike. Otherwise, I have another chart to show.
Well, it just shows this wealth cycle more clearly and the amount of reversion. And currently, we are at, what's the next chart?
The next chart is the gold-silver ratio in gold. It's the same thing we just saw. However, I've also plotted on the right scale the opportunity size in silver to catch up to gold in order to get back to the all-time high or the all-time low, depending on your perspective. So the all-time high for silver relative to gold was at a gold-silver ratio of 14 to 1. And we're up around 80, 85. I made this chart a few days ago. I think the ratio is about 80. And so that implies that silver would have to outperform gold by 5.7 times in order to catch up. So it doesn't give, quote, a date or a number of years, nothing like that. But eventually it would have to outperform by 5.7x to catch up to the previous gold silver ratio.
Yeah, well, while we're making this, we're currently at like 85. So I just did the math again, and I come up with 85 divided by 14 is 6.07 times. So more than 6 times is the leverage.
JP Morgan's Jamie Dimon says gold could hit $10,000. When the world's top banker starts sounding like a gold bug, you know the reset has begun.
Yeah, and I do believe that. So this is. I do believe that is what's going on right now. That is the reason for gold becoming 1/5 of global monetary reserves. That is the reason for all the trends that we've just seen in this video. And this monetary reset, there are things that happen very slowly at first, and then all of a sudden. This is a Hemingway quote, I believe.
Yeah,
right. And how do you go bankrupt? Well, very slowly at first, and then all at once.
2 ways: gradually, then suddenly.
There you go. Right, gradually, then suddenly. And that is, you don't want to get caught up in this monetary reset.
Silver's quiet resurgence signals the next phase of the global wealth reset. What began as a policy move in India, recognizing silver as collateral and expanding its role in finance, has now evolved into a powerful global message. Sound money is returning to the core of trade and value. As the paper markets strain to maintain credibility, the physical world is awakening. Silver's scarcity, coupled with growing industrial and monetary demand, is forming a perfect storm. When this revaluation fully ignites, the speed of change will surprise even the most prepared investors. This moment isn't about chasing speculation, it's about recognizing a shift in trust. The gold-silver ratio hovering near historic extremes points to an inevitable convergence. As faith in fiat fades, these metals are reclaiming their centuries-old role as the foundation of honest value. The monetary transformation underway isn't gradual anymore. It's accelerating into a phase of sudden repricing and global awakening. Those who align with tangible assets now will stand on the right side of history as this financial reset unfolds.